Joining me now is Jay Woods, Chief Global Strategist at Freedom Capital Markets, and a friend here on the floor of the New York Stock Exchange. Jay, welcome to NYSE Live.
It's good to be with you. This is fun. It's an exciting day. We got a lot to go over, so I can't wait to chit-chat a little bit.
Yeah, so Nvidia's earnings released yesterday after the bell. What is your takeaway? Yeah,
the takeaway was they didn't knock it out of the park from their standards. Their revenue beat. There was a whisper number that came in line, but it did well, and it did well without help from China revenue, and that was one of the things that people were a little concerned about. I know I was concerned about how are tariffs and how are the China trade going to impact it, and they came in with numbers in line without having any of that China numbers that really could impact it, as they're still trying to figure out what is going on with the trade there, what they're allowed to do, what they're not allowed to do, and then price action. Price action is always the tell for me. The stock was trading just under all-time highs going into the number. So it was going to take a beat, a raise, and just a wow factor from that call to really lift it. It traded off, and as we're talking right now, it's almost flat on the day in the pre-market. So I'm very curious to see if this stock can actually rally, because the initial reaction, the knee-jerk reaction was, all right, it wasn't a wow enough quarter for them to take us to even higher heights, being, $4.3 trillion market cap. It could take a little bit. So to me, the stock has been very resilient and continues to hit on all cylinders. It just didn't, wow us like it normally does, but it didn't disappoint either. So it was just right. And we'll see what price does. Can it be enough to take us higher? The S&P 500, flat right now, but this is good given the run we've been on. So I'm very, happy because it was constructive going for the next quarter. End of the year, I think we're poised to do some great things. And this was supposed to be a speed bump, and it never happened.
Well, it makes up 8% of the S&P 500. Yeah. It is a Dow 30 component. What does this say about the market as a whole? Yeah,
the market is just humming along. And what we had been lagging, Nvidia has been leading this market. It had a tremendous run over the last 2 months. But a lot of the technology stocks have been kind of faltering. When you look at a Palantir down 20% from its high, CrowdStrike, which reported earnings today, was down 20% from its high. It was down 8% after it reported. Solid quarter, didn't wow the street again, a little like Nvidia, but now the price action's starting to come back. So when the technology was leading us, we saw a little pullback, and all of a sudden other sectors pulled up the slack. I'm slurring a little bit this morning, I apologize. But healthcare, industrials, we're seeing rotation in this market. So to me, when the technology stocks aren't wowing us and those magnificent names aren't, rushing to new highs, we have other sectors that are picking up the slack. So we're seeing good breadth in this market, good constructive, things under the surface are happening. And historically, a rough patch for this market. August, September, historically 2 of the worst months. We're getting through August, 2 more days to go, and we'll see what September brings.
So GDP and weekly jobless claims data came out this morning. GDP, PCE data, a lot of acronyms.
A lot of them.
Comes out tomorrow. What does this say about the economy as a whole? What are we looking at?
Yeah, the economy is giving us mixed signals. We are looking for inflationary data, unemployment data that's going to be favorable so the Fed could cut rates. That's basically what people are focused on, laser focused on, after Powell's speech in Jackson Hole last week. So PCE, the Fed's preferred inflationary gauge, that comes out tomorrow. That is expected to tick up by 0.1%. If it comes in line, I think this market could rally again, and that rate cut that we're hoping for in September should still be on the table. As we come in and tape this interview, 85% chance of a cut still at the September meeting. Forget all the drama going on with the Fed and when Lisa Cook may be replaced. It looks like we're on pace to have a rate cut. The PCE number, if it comes in line, God forbid it comes in lower, that would be great. I'm concerned if it comes in hot, that could throw a wrench into any cuts that we have come September. So the GDP, everything going well, but we're worried about unemployment and inflation. And right now, things are okay where we can probably cut 25 basis points. Let's just try not to listen to all the drama out of Washington because that skews things. The fact is we're trading at all-time highs, and there's a lot of noise going on, but the market is slowly, boringly, steadily going up every day. And to me, that is extremely positive as we head into September.
And August is, like, as you mentioned before, traditionally a rough month for the markets. It's been resilient this year. What do you see for September, October, and beyond?
Yeah, I think September is going to be rocky. August defied a little bit of logic that we didn't have that extra volatility, and we're making new highs every day, a little bit here, a little bit there. S&P on its best weekly winning streak all year, up 3 weeks in a row, looking for 4. That is unbelievable. Now, September, worst month in the history of all months. You know, it's the only month of the 12 months that are down, going back to 1950 when you look at the S&P 500. So we know we're coming into a rough patch. We'll be through earnings season, so there's not going to be much individual stocks to look forward to. We have a big Fed meeting, so we do have some drama there. Let's see how we get through that, but I would buy volatility as a hedge just to make sure, you know, look, if things do pull back, that's okay. We do get 5% retracements a year in the S&P 500. These are normal, healthy retracements. We have not had one after this Liberation Day rally where the S&P 500 is up over 35%. We've pulled back maybe 3.5%. You know, so if we get a little more volatility in September, I think it's fine. And then October, fourth quarter historically, we're going into the strongest 6 months of the year. Seasonally, fourth quarter, strongest quarter of the year. And I think we're set up when you see stocks like Nvidia, see stocks like an Apple that have been lagging. They will probably lead us into the end of the year over that finish line into 2026. But, you know, let's focus on PCE tomorrow and take it one day at a time, as the Powell likes to take it one data point at a time as well.
And in the last 30 seconds, I understand you wanted to speak about Taylor Swift.
Well, who doesn't want to talk about Taylor Swift? That's all everyone's talking about. But I noticed that one of the biggest stocks, biggest winners was Signet Jewelers yesterday. And there is now this theory, because of this big engagement, you're going to see a run on engagement rings. You're going to see a run on weddings. So watch some of these stocks that are jewelry related because they may have started a new trend. Who knows? But it was big news. Didn't really move the markets too much, but it did move some of the jewelry stocks. So keep an eye on that.
All right. Thank you, Jay Wood, Chief Strategist at Freedom Capital Markets. Thank you for joining us.
Thank you.